Hello, everybody. My name's Drew Demon, and I'm the Devil Stockbroker. I'm hanging out here in the trading floor with everybody, just looking at a couple of things in the market. We were analyzing the SPY, and figured I would give my thoughts here. So far, we've been on this absolute tear ever since the manipulation article from the Wall Street Journal came out and announced that there would be this 50 basis point hike and that the Fed was going to pivot and start getting less aggressive, which was a totally baseless statement, but it was enough to get the market fooled and send it on a run for about 6% since that article came out early this week. So the statements that were made by the Wall Street Journal don't really have any evidence. They didn't disclose their source, of course, because I honestly don't think they have one. Their source is probably just some call from a broker sitting in some glass tower in Wall Street saying, hey, say this so that we can get out of our positions. So at this point, we've got several topping patterns showing up in the SPY. So it looks to me like the move is pretty much done for at least this short-term rally. We have what looks to me as a inverted hammer candle at the top of the chart on the 1 hour. So this inverted bull hammer pattern, which if you drop down to the 30-minute, actually shows up as an evening star with a confirmation candle. So those two patterns together pretty much indicated that this could be a top, and it coincides with, on the 15-minute, if you look here, we have a head and shoulders pattern that showed up in the market here. And while we may form another shoulder, we kind of technically already hit that level right around here when we tap the 9 on the 15-minute EMA. So that's enough confirmation for me to call this at least a head and shoulders pattern, coinciding with that inverted bull hammer or inverted hammer candle or evening star pattern. So right now, we've got a few things to consider. So tomorrow, we have a bond auction going on that's going to target the 8-week. That's the 2-month bonds. This auction comes out on Thursday, and what we end up seeing, if you go onto the daily chart on like 1-month bonds or 3-month bonds, there's this giant green candle from the yields popping every single Friday, pretty much. That's from those auctions. That's because the government's issuing new bonds and they're auctioning them off, so this causes a big jump in the yields. Although part of this could cause a sell-off in the market, what's more important is that these are being sold out in order to accumulate collateral for other assets. So bonds are providing more safe fixed income, and this gives institutions an opportunity to exit out of the more volatile, dangerous, variable assets in stocks and equities and derivatives. So there's potential for us to see a big pullback on Friday, given that this updates in the evening. So the auction is happening on Thursday, according to the economic calendar. So that's something for people to pay attention to. Going back to the SPY, this is also going to line up with PCE. So PCE is the Personal Consumption Expenditures Price Index. So Personal Consumption Expenditures Price Index is one of the numbers or the piece of data that the Fed relies on to measure inflation. That's coming out on Friday, and it's going to be released 1 hour before the market opens. So the reaction that we've seen from PCE or from the market going into PCE is that every time that there's a optimistic market going into one of these data releases between PCE, CPI, or the PMI, any of those major numbers that are a big inflation indicator, whenever the market is optimistic, meaning going bullish and has strong momentum to the upside, going into those data releases, there's always this big sell-off that happens afterwards. So for instance, we had CPI data coming out in August, and we were extremely optimistic going into it. We sold off immediately afterwards. Optimistic going into mid-September, sold off the day after when CPI released. And same thing in early June, had a huge sell-off when everybody's hopes of inflation peaking were dashed by an extremely hot, a record hot CPI report that had inflation near 9%. So all of those signs have played out very badly for bulls going into those data releases. And now we've got a little bit of bullish momentum still continuing even today, but we're starting to see the market begin to pull back going into close. So the way I'm interpreting this is that there is going to be some pullback, if not this week, then next week as we approach and during the day of FOMC. I really don't believe anything that was stated in that Wall Street Journal article. I'm pretty much convinced that it was just done solely for the purpose of helping those institutions which were trapped in dying long positions an opportunity to escape those and get out intact. So I'm already in short positions for this. My target, based on where we're currently at continues to be the 38% fib retracement level. So this is drawn from the lowest low from our recent market low. So you have the I've got this low marked out down here where we had that gap down after the CPI data release this month, and then we started ripping back to the upside unexpectedly. So if you draw a fib retracement level from that low, and then you put the top of the retracement to the high from the current day right at the tip of that evening star, this is how you get those levels, and you set up various support and resistance levels. And as you can see, we have a support resistance right here that matches up, and we have a support right there that lines up. So both of those are also going to coincide with liquidity levels. Not very large ones, but they are liquidity levels, and that is it's pretty much an interchangeable term between support resistance. It just refers to a bunch of orders waiting to be filled down there. So that's my expectation, is that these are what you could think of as price targets for the market to waiting to be filled for short positions coming down and for people to switch to long positions after FOMC and all of the painful news is out of the way. As you can see, we still have a lot of really bad news coming out if you've been keeping up with that stuff. So there's really nothing good happening. Google's earnings were terrible. Their guidance was terrible. Microsoft had a big loss of revenue recently, and their earnings turned out disastrously as well. We've seen several of the mid-cap and small-cap stocks running along with the SPY, but that's starting to come to an end, and we're starting to see big pullback in tickers like AMC, GameStop, IDEX. All of the tickers that I was paying attention to for potential squeezes are now starting to get hammered back down, along with most of the mid caps. So at this point, I'm playing the entire market to the downside, and I'm going to wait out this pullback. My hope is that what we'll be able to do is grab a long position after the FOMC meeting is complete, cash out of those short positions after everybody has gone through that whole panic phase, and the negative reaction to the news is over with. Once the fear plays out, then we go into mid-November, election season ends, and then we enter into the holiday rally season, assuming that nothing else truly terrible happens. But with the PCE data release on Friday and FOMC on November 2nd, that's pretty much everything that I'm waiting on. If you got your entry early to a short position here today, then good luck to you, and I will see you guys next time. Thank you so much for watching. Have a hell of a time in the markets. Thank you guys so much for tuning in to watch this video. If you enjoyed the content and you found this information helpful to you in your own trading strategies, be sure to leave a like on the video. It helps out the YouTube algorithm and helps us reach out to others who need this information too. Be sure to subscribe if you want to see more. And if you're not a member of Hell's Trading Floor already, consider joining our Discord by joining us at hellstradingfloor.com which will allow you to sign up for our Discord at discord.gg/hellstradingfloor. Thank you guys so much for watching, and I look forward to seeing you in the next one. Until then, have a hell of a time in the markets.